Hey guys, welcome back to Statistics here. In this video, we're going to discuss about the stock market and some of the smart investing techniques which a long-term investor should follow in order to make handsome returns from the stock market. So I will discuss all the techniques here and I have divided them into different lessons. So we'll cover all the lessons and by the end of this video, you'll understand many things about the stock market and how exactly these investment techniques work in order to gain more profitable income from the stock market. So let's get started with the lesson now. So first lesson is you should view stock market as a retail shop owner. So what does a retail shop owner does? Retail shop owner buy inventories, and the thing is they buy different inventories. So there is diversification in inventories. Think of it as a shop owner who has actually bought something which is not giving good return, or probably the item is not selling. So what did the shop owner do? It holds the item for a longer duration, but it never sells it off at a price at which he has actually bought it. So you must have gone to retail shop और वहाँ पर 3 साल 4 साल पुराने items भी available because they don't actually get sold. But then retail owner also wants that item to get sold and earn some profit on it. Similar is the strategy for stock market. The thing is you have to buy those stocks which offer dividend. So if the stock is offering dividend, you can hold it for a longer duration and then you can make money on dividend, and then later on when you have the right time, you can sell it off for higher profits. This is what exactly retail owner also does with their inventories. The next thing is never invest in one item. So there should be always portfolio of different industries. We don't invest in the same industry also. Suppose I am buying banking industry. So I won't invest in HDFC and ICICI and then Yes Bank because all of them are from the same segment. So अगर एक को loss होगा तो सबको loss होने लगता है. Alright? So if the new regulation comes from the RBI and then all of the banking industry start making losses, I will end up making losses. So that's why diversification in portfolio is important, and then it is also important to invest in different investors. This is what retail owners also does. They actually bought different items from different areas. Suppose if the price of wheat is rising, they'll sell off rice. Alright? So that is what. There are differentiated items. Then the next thing is whenever the price is falling, you have to keep holding the stock. If you are choosing right stocks which pays dividend and which have the potential to actually get more profit in the longer duration, then it is better to hold the stock and then don't panic. Whenever the price rises and you make around 15% of your profit, that is the right time to actually sell it off. This is what exactly the retail owner does, and that is how a retail ownership operates. Okay, so these were the specification for the lesson 1, and you have to remember all of them. I'll also tell you how exactly you find the right stock and the stock which pays dividend in later part of this video. But these are the most important points you need to remember when you are actually entering into stock market as a long-term investor. Alright, let us move to lesson 2 and I'll show you what exactly the way of investment is. So lesson 2 is very interesting. It's tell you about the technique where you can actually earn more than 1 crore with just investment of 2.5 lakh. That is 2,50,000. So let me tell you what exactly this technique is. The thing is you should have an initial investment of around 10,000 rupees. And once you have this, what you do is you add 3,000 every quarter. So you are increasing your initial amount by 3,000 in every quarter. That means you are actually spending 12,000 yearly. But you are not increasing this amount. And then you are earning around 6.5% interest every quarter on your investment. So this will actually do a magic spell and you will get very handsome returns. Let me show you on Excel what exactly happens if you does this. So let me open my Excel file. I have it here for you. Here exactly the things. Your starting out is 10,000. You invested 3,000 for a quarter and then you got 0.67%. Now doing this, you'll get an earning of 871 on your initial investment. In the next quarter, you have reinvested this amount and you have got 13,870. Now again, I'll put 3,000 more and try to make a quarterly return on 0.67 on my initial investment, and then my earning will rise huge. Alright, so if you keep on doing this exercise for a very longer duration, that is of 80 quarters, which means 20 years. So what will happen is, you will end up making 1 crore 28,000 plus amount. And if you see, the amount I am investing is just 10,000 here and then this amount. And this amount which sums up to 2,40,000. So my total investment will be 2,50,000. With 2,50,000, I can make 1 crore plus amount. Now the important part is here, is this quarterly growth. If this quarterly growth also changes and you make just 5% every quarter, then also you will end up making very good amount of return on your investment. If you see here, you will still make 35,41,000 plus amount with just 5% return in every quarter and with the investment of 2.5. Now let me get back to open book once again. Here's my open book. This is 0.6. But this can change also. The important part is you need to keep on investing in that. Now, another important thing is you will never make same amount of returns in every quarter. So it might be this amount turns out to be 10% of return in one quarter, then 15% amount in another quarter, and then some less, probably 0.1% or negative also it can come in some quarter. But overall, if you just accumulate it or balance it out, it will turn out to be more than 5% or it could be in 6%, 7% also. So with this less amount of investment and with this amount of return, it is very important that you understand how exactly this investment techniques works. Alright? So we call it quarterly investment strategy and it works very handsomely with the compounding returns. So let's move to next lesson. देखते हैं उसमें क्या है. So the next technique is about buying the right stock at the right price. Now how exactly you arrive at the right price? So for arriving at the right price, people use different techniques. Some use price to earning ratio and some people use earning per share and some also use return on capital employed. What exactly true about all these is they are necessary, but they are not 100% accurate. However, there is one more method which is more accurate or should be always applied. So that technique is actually coming to the base price of any stock. Suppose I go to market and I am looking to buy an Android TV, and I assume that usually the price of the Android TV which I was buying, it's always around 30,000 or so. But when I go to shop, the shopkeeper ने मुझे बोला it is around 50,000. Should I buy? Of course, if I know it's around 30,000, I will not buy it. Similarly, the technique which works with the stocks. So what you have to do is you have to calculate the base price of any stock. Now to calculate this, what you need is 3 years price of any stock. You can download this closing price data from any exchange and then You just average it out. So 3 years closing price average. Once you have this, you know exactly at what price the stock used to sell. So if there has not been a very big economic activity like कंपनी ने कुछ एक्वायर कर लिया या कंपनी ने बहुत बड़ी इनोवेशन कर ली है, तो कुछ खास चेंज नहीं आने वाला है बेस प्राइस से. सो इट्स इम्पॉर्टेंट टू एक्चुअली कैलकुलेट द बेस प्राइस एंड देन coming up to that, you actually understand what exactly you should pay. Now, there is also important thing when you calculate base price. Sometimes there could be issue of split. So there is always stock split, and then there could also be another issue, which is actually bonus. So company might offer a split to its stock owners. अब स्प्लिट में क्या होता है कि अज्यूम करो 100 रुपीज़ का एक शेयर था और कंपनी ने बोला 1/2 का स्टॉक स्प्लिट होगा, तो इस 1/2 एज अ रेशियो. तो उसमें क्या होता है कि फर्स्ट स्टॉक का जो प्राइस 100 था वो फॉल कर जाएगा 50 पर. इट मीन्स कि प्राइस चेंज हो गया विद द स्प्लिट, एंड नाउ if you have 2 shares, then you have the same amount of ownership you had earlier. तो पहले अगर 1% का ओनरशिप मिला हुआ था तो अभी वो 0.05% का हो गया हाफ एक शेयर. तो आपको 2 शेयर चाहिएगा सेम ओनरशिप के लिए. तो व्हेन यू कैलकुलेट बेस प्राइस, अगर स्प्लिट आया है लाइक इन द लास्ट 1 year, 2 years और 3 years, वो प्राइस का एडजस्टमेंट करना पड़ता है. Once you adjust that price, then you can arrive at the base price and then you can decide what exactly the base price is and whether you should buy it. I'll tell you how exactly you decide on the base price. So first of all, let's talk about bonus. So suppose that company is actually working on 1:1. So 1:1 is the ratio, and company का शेयर अगर ट्रेड करता है ₹200 पर, तो और कंपनी ने 1:1 शेयर किया, विच मीन्स कि जिसके पास भी एक शेयर है उसके पास एक और शेयर आ जाएगा एज अ बोनस. सो अगर शेयर्स बढ़ जाते तो इसका जो प्राइस है वो ₹100 पे आ जाएगा, क्योंकि 200 एक शेयर का प्राइस था. तो यहाँ पर अब 2 शेयर्स में ये प्राइस स्प्लिट हो गया, और नाउ यू नीड टू हैव 2 शेयर्स इन ऑर्डर टू मेक मनी based on earning per share in the company. Okay, so अगर bonus भी होता है, then also you have to adjust the price in order to calculate what exactly the base price is. So the average price calculation should actually understand whether in the last 3 years there was any split or bonus in the company shares, and this information you can get from the exchange. Now let's come to the final calculation. Once you have the base price, so suppose I was calculating base price and I arrived at X. So what I will do is, if the price of stock X is 20% higher, then its base price, sell it off and look for better opportunities in another stock. And if X is scheduled price average 20% lower, then buy. Of course, this comes with more of economic statistics, what exactly stock market is doing and what exactly is happening. But this is the best strategy in order to arrive at the right price of any stock, so that you always buy the shares which are undervalued and always sell off the shares which are overvalued in order to not to make losses coming up in the stock market. Alright, अब next lesson पे चलते हैं. Alright, so next one is about fundamental share valuation. How exactly you value a company or its share, whether they are undervalued or overvalued. We have already learned about base price, but we need to take into account more things as compared to just base price. इसमें हम लोग नेट सेल्स को भी इंक्लूड कर लिया. जनरली in order to value a profit making company, people use EPS, that is earning per share, or PE, that is price to earning ratio. But the thing is, when a company is actually making losses, at that point of time this technique does not work, because it always consider about profit making companies. So usse jo option hai in order to invest a potentially growth company which can give you higher returns, वो मिस हो जाता है. तो इसके लिए हम लोग नेट सेल्स को यूज़ कर सकते. तो जस्ट टू explain to you with an example, suppose there is company X and this company has 10 crores of sales, but this company has also invested 12 crores in his operational business. So this company will show you actually the loss of 2 crores. But what will happen is, after the company expansion in the plant in which it has invested 12 crores, it will start making more earnings. But right now its earning per share and price to earning ratio will be very low. So you will always ignore this type of company, but it is also beneficial to invest in this type of. Similarly, on the other hand, suppose there is a company which has 2 crores of sales and has actually sell off a building to show profit, and is now actually showing you off, and it's actually now showing you off that it has earned around 1 crore profit. But the thing is, this profit is actually coming from the selling of the building. It might be that its earning per share and price to earning ratio are higher than compared to the first company, but in the end, the first company is going to win. So how do you identify those sort of companies? So the best technique is to have net sales per share. So what you have to do is you have to go to a company you are analyzing and get a data of quarterly sales. Once you have the quarterly sales data, you just divide this quarterly sales by total share, and once you have this value, you just multiply this value with the once you have this value, you just multiply this with 4 in order to get net sales per share. So once you have net sales per share, you can actually determine whether the stock is undervalued or is overvalued. Just for an example, suppose there is a company Y which has around 9.62 billion of quarterly sales, and this company also has a shares whose price is 25 million. So in order to calculate net sales per share for this company, I'll just divide 9.52 billion by 25 million. And once I have it, I will get a net sales per share which will be 33.02 per share. Now I'll just multiply this with 4 and I will arrive at annual sales of 132. Now if the current market price is actually lower, then this stock is undervalued. So I'll just confirm this with correct. If this CMP is actually lower than 132, I can say this is undervalued and I buy that share. So this is how you identify the undervalued share. और इस टेक्निक को हम लोग बोलते हैं स्टॉक वैल्यूएशन मीटर. सो दिस इज हाउ यू आइडेंटिफाई द अंडरवैल्यूड शेयर. और इस टेक्निक को हम लोग बोलते हैं स्टॉक वैल्यूएशन मीटर, बिकॉज इसमें फंडामेंटल शेयर का वैल्यूएशन हुआ है नेट सेल्स को यूज करके, एंड हम लोग ने प्रॉफिट मेकिंग कंपनीज को फोकस नहीं किया. ऑलराइट, so this technique is much more better. Let's go to next lesson then. Alright, so the next one is about face value and premium. So what actually happens in a stock market, for any share, the market value is determined by two things. One is the face value, that is the amount which is written on the stock, and then it is the premium, which is the higher amount we pay in order to actually get the stock. So just suppose there is a company called X, and this company market price of share is around rupees 65. Out of this, the face value is around rupees 5, and the premium is rupees 60. So what actually happen is, whenever someone actually wants to buy a stock, they should be someone who wish to sell it in order to make higher premium. So suppose if someone is actually ready to pay rupees 66 and someone is willing to actually sell at this price. So this is a buyer and this is seller. Then the premium will actually rise. Similarly, premium can also fall based on the performance of the company. But this is how premium operates. Now the thing is, this face value is actually decided by the board of directors. So this face value does not change until and unless the directors of the company want to change it. But the premium actually is determined by the stock market, buyers and sellers, and this is based solely on supply and demand. And this is the example for supply and demand. So if the supply and demand does not matches, then what happens is premium can keep on getting rise or it keeps on getting fall based on whether there are more sellers who wants to sell his stock or based on whether there are more buyers who wants to actually buy the stock. It never happens that a regulatory authority actually decides the premium. However, in some cases stock exchanges actually market को regulate करने के लिए एक circuit limit लगा देते हैं. But that is always the case in exceptional cases. Now I was actually talking in the earlier lessons about the stock you should buy which actually offer dividend. So what will happen if I have 1,000 shares of company Y which have a value of rupees 65? So will I get around my dividend on each share, and I'll get dividend of 65,000? Well, the thing is, rupees 60 is actually here the market price, and only rupees 5 is the premium. So what my stake is in the company is only of rupees 5. So what I will get is the dividend declared. So if the company declares 50% dividend, then what I will get is dividend on my face value and not on the premium one. So if the face value is higher, I'll get more dividend, and this dividend is irrespective of what returns I am going to make with the premium. So when you invest in the good quality stocks, तो उनका price भी बढ़ता है, so you'll get more premium, and then you'll get also dividend. Let us discuss in this lesson. इसी लेसन में हम लोग बात कर लेते हैं अर्निंग पर शेयर और प्राइस टू अर्निंग रेशियो. सो सपोज एक शेयर है Z और उसका प्राइस है ₹1 एज फेस वैल्यू and ₹199 as premium. So in order to buy this, what you have to do is you have to pay ₹200. Now the thing is, if this stock also has earning per share, that is how much I am going to earn per share, is around 4.78. So then what is actually going to happen? I can actually calculate price to earning ratio. So what I have to do is I have to take this market price, which is the sum of face value and premium, and then I have to divide this by 4.78. Let's make it 5 only. So you'll have 40 as your PE, that is price to earning ratio. So people are actually willing to pay 40 rupees in order to get 1 rupee return from this stock. Alright, so that is how they actually value the share. This is actually used in profit making companies, and you analyze profit making companies based on it. Okay, let's move to next lesson then. Alright, so the next lesson is about identifying the speculation in the stock market. So the thing is, there is actually speculation when there is an operator involved. So what you have to do is, to begin with, you have to actually find out the base price of share, which is actually trading 20% less than base. So once you identify these kind of shares, what you have to do is you have to actually make sure there are no bulk or block deals. What exactly bulk or block deals means? So whenever there is activity taking place or buying of share is taking place at a very large scale, then it is actually what operators is working on. Operators actually have a lot of money, so they can actually buy in bulk and in larger quantities. So whenever you notice any bulk or block deals are taking place, that is the stock you should avoid. Stock avoidance, even if that stock actually has base price less than 20%. This is because whenever there is an operator involved, they actually inflate the figures so that anyone who is a retail investor, they get into it, and then once the desired price which the operator thinks was required, they actually sell it off. So at that scale, panic comes up, and then retail investor can actually make losses also. So it's better to avoid any bulk or block deals in the last 2 to 3 years taking place, or any share where you find the base price less than 20%. Now this data you will get from the stock exchanges, and some of the stock exchanges also does not share this data, so you need to be very vigilant in order to understand the operator activity, but most of the stock exchanges give you this data. So it's get easier, you just have to understand the volume with which actually buying and selling taking place. Block deals are generally private investments. So these kind of activities does not take place in open bidding or electronic market, but they are actually privately negotiated. But you will get that information. यूएस और कनाडा में जब 10,000 से ज़्यादा या 2 लाख डॉलर्स के बॉन्ड्स की डील होती है, तब हम उसे कहते हैं ब्लॉक डील. इंडिया में आपको स्टॉक एक्सचेंजेस में ये मिल जाएगा और इसकी ज़्यादा प्रॉब्लम नहीं है. बट द क्रक्स इज, अगर 2 साल से बीच में कहीं पर भी कोई ब्लॉक डील हुई है, तो आपको उस स्टॉक से दूर रहना है. ओके, द नेक्स्ट लेसन अबाउट राइट टाइम टू बाय द stocks when they are actually below their face value. So sometimes it also happens the company make losses and the stocks come below their face value. So it is not always the case that if the stock is below their face value, you will earn profit. So let's discuss how exactly this works. So what actually happens is, most of the investor thinks whenever a stock is below its face value, it is a buy deal. But it was not always the case. Sometimes what actually happens is, even if the stock is below its face value, it does not make profit. So in order to do that, we need to do a thorough analysis before you actually think of buying any stock which has a market price less than its face value. So there are some points. I'll just give you the pointers. So one is about promoters holding. So whenever a promoter's holding is actually greater than 15%, it is a good deal to think of this stock in a longer terms, because it's a positive signal. If the promoter is not actually selling off, that means the promoter thinks this will work. So they understand the fundamental concept better than a retail investor. उसके बाद आते हैं बुक वैल्यू. सो द थिंग इज, आपको चेक करना पड़ेगा कि स्टॉक का करेंट मार्केट प्राइस बुक वैल्यू के एटलीस्ट 3 टाइम्स हो. नेगेटिव बुक वाले स्टॉक्स को अवॉइड करना पड़ता है. सो बुक वैल्यू शुड बी 3 टाइम्स. I can say it into this. Then the third point is 52 weeks का हाई एंड लो रेशियो निकालना पड़ेगा. ये रेशियो 2 से कम होना चाहिए. सो 52 weeks high and low ratio. And this should be less than. इसके बाद बात आती है नेट सेल्स. द थिंग इज नेट सेल्स अगर अपने लास्ट सेल्स से एक्चुअली नीचे ट्रेड कर रहे हैं तो ठीक है. तो नेट सेल्स आई कैन से इन पीरियड टी शुड एक्चुअली ट्रेड फ्रॉम नेट सेल्स in period T minus 1. Alright. Then there is another point. That is about base price. So base price I have already told you how actually you calculate it. Now this base price should not have actually varied a lot. So it should not have gone greater than 20% or less than 20%. So there should be actually close to this ratio. It should not have gone very far from this. Alright? So there is stability. Then it's again come up to block deals. So you don't need to actually go for anyone which has a block deal or bulk deals. Then the last one, that is our stock split and bonus. So in the last 2 years there should not have been any stock split or bonus activity which has taken place in the market. So last 2 years. Once you know all these criteria satisfy, then you actually have to perform one more step. That is, you have to calculate the daily moving average for the stock on 200 days. Okay. So once you have this, अगर ये ऊपर है तो it is a good indication. But अगर ये स्टॉक अपने 52 वीक के हाई से 60 to 70% नीचे ट्रेड कर रहे हैं तो this is actually going to be sideways and you won't make a good profit on it in a short term. Okay. So it should not trade below 60 to 70% of its daily moving average. And if this is high for 52 weeks, then what you should do is you should buy. This is buy and this is actually sideways movement which is not a good deal. And these are all the factors you need to consider. Alright. So I think that is all for this lesson. Let's move to the next one. In order to select the right stock for investment, there are some criteria which I will write down for you. Number one is about promoter holding. So every time you thinking of buying a stock, make sure there are promoter holdings which are greater than 15%, and the promoter should not be selling his stake less than this. Alright. So because this actually gives you a confidence and positive signal about the company. With the promoter is actually reducing its holding, so ये basically a red flag है. You should not go for that stock. Next is about 52 week low and high ratio. So the thing is, you actually calculate 52 week low and high ratio. और स्टॉक अगर अपने हाईएस्ट पॉइंट से 50% से ज़्यादा नीचे ट्रेड कर रहा है तो आपको नहीं लेना है. जैसे कि अगर स्टॉक का 52 वीक हाई रेशियो कुछ आता है 256 अमाउंट और समथिंग, और स्टॉक अगर ट्रेड कर रहा है 106.35, दैट इज लेस देन 50%, तो ये एक रिस्की इन्वेस्टमेंट है और आपको नहीं करना है. ऑलराइट. देन देयर इज थर्ड क्राइटेरिया विच इज़ बल्क डील्स. कहीं पर भी अगर बल्क डील्स है तो स्टॉक से दूर रहने. एंड ये बल्क डील्स का डेटा 3 to 2 years के बीच में कोई भी अगर बल्क डील हुई है तो कभी भी चेंज हो सकता है और प्रॉब्लम क्रिएट कर सकता है. फिर उसके बाद आता है बुक वैल्यू और मार्केट प्राइस का कंपेरिजन. सो एक बुक वैल्यू एंड मार्केट प्राइस. अगर करंट प्राइस बुक वैल्यू से 3 गुना ज़्यादा नहीं है तो ये एक अच्छा साइन है और आपका स्टॉक अंडर वैल्यूड है, तो आप उसको बाय कर सकते हो. ऑलराइट. उसके बाद आता है बेस प्राइस. सो बेस प्राइस लास्ट 3 ईयर्स का एवरेज, और अगर वो 20% से ऊपर या नीचे ट्रेवल नहीं कर रहा है तो उसको बाय किया जा सकता. इसके बाद आता है स्प्लिट या बोनस. So there should not be any split or bonus in the last 2 years. Alright. So let's move to the next lesson you will see. So the next lesson is about truth on split or bonus. So what actually happens is when you apply split or bonus, it actually creates some psychological factor in investors, but it is not going to actually benefit them in the long run or in the short run also, but it is actually going to benefit the company. समझते हैं कैसे? तो जस्ट अज्यूम यहाँ पर 100 शेयर्स थे कंपनी के पास और कंपनी ने हर साल 1000 रुपीज का प्रॉफिट. अब कंपनी ने बोला कि हमारा अर्निंग पर रेशियो 1000/100 है, दैट इज 10 EPS. हम लोग क्या करते हैं कि हम 1:4 कर देते हैं. दैट मीन्स कि हर 4 शेयर पे 1 शेयर फ्री में अपने इन्वेस्टर्स को दे देते हैं. तो इससे क्या होगा कि आपके पास अगर पहले 100 शेयर्स थे तो अब आपके पास 125 शेयर्स हो जाते, जिसमें कि 25 शेयर्स आपके न्यू हो गए. लेकिन कंपनी का जो प्रॉफिट है वो अभी भी 1000 ही है. तो जब आप EPS निकालोगे तो आप 1000 से 125 को डिवाइड करोगे और कंपनी का जो EPS आएगा वो 8 आएगा. इससे कोई खास बेनिफिट तो हुआ नहीं, पर इन्वेस्टर को क्या लगता है, उन्हें कुछ फ्री में मिल गया. उन्हें 100 शेयर्स वाले इन्वेस्टर को लगेगा कि उसको 25 शेयर्स फ्री में. नाउ दिस इज एक्चुअली गोइंग टू क्रिएट ए कॉन्फिडेंस इन द कंपनी एंड people would like to buy the shares of the company because the share is now more affordable and earning per share has reduced. So in the short run there would be more investment coming to the company. However, in the long run, if the company does not perform better, then it will adjust automatically and it will come to its old value, which was earlier also the case. So investor is not going to make any benefit with split or bonus. Let's talk about split now. So split also create a psychological factor only. Just suppose एक स्टॉक का प्राइस अगर फिर से 1000 रुपीज है. नाउ इस 1000 रुपीज पे कंपनी ने बोला कि हम 1:5 स्प्लिट कर रहे हैं. मतलब जिस भी इन्वेस्टर के पास 1 शेयर है उसके पास 5 शेयर हो जाए. अगर एक स्टॉक का प्राइस था 1000 रुपीज, देन इफ द कंपनी एक्चुअली मेक्स इट 5, तो प्राइस क्या हो जाएगा 200 रुपीज, बिकॉज दिस रेशियो हैज टू रिमेन सेम. तो इसमें क्या हुआ, आपके पास शेयर्स बढ़ गए बट आपका जो प्रॉफिट है उन शेयर से आने वाला है वो उतना ही रहेगा क्योंकि स्टॉक का प्राइस तो चेंज नहीं हुआ. तो दैट्स व्हाई वी ऑलवेज से कि स्टे अवे फ्रॉम स्प्लिट एंड बोनस इन द लास्ट 2 years. अगर कंपनी ने ऐसा किया देन इट इज बिकॉज ऑफ इट्स ओन प्रॉफिट एंड नॉट फॉर द इन्वेस्टर. हाउएवर इन्वेस्टर थिंक्स नाउ दे हैव मोर शेयर बट देन द प्राइस ऑफ देयर इन्वेस्टमेंट हैज रिमेन्स द सेम. ऑलराइट. So let's move to next lesson then. So this lesson is about reverse trading strategy. This strategy is used in order to actually recover your losses. So anytime as a long-term investor, if you are making losses, this is the best strategy to deal with in order to actually recover whatever losses you have. So just to give you an example, on 31st December 2007, stock market was at its peak in India. And after that, financial crisis happened. And in 2008 recession, many people suicide, market crashed. So just suppose at this rate, somebody bought some shares of X company. And these shares was trading around rupees 560 at that point of time. So an investor actually buy 10 shares. So total investor was around 5600 in that case. Now what actually happened when the market crashes, this stock fall down and it falls to rupees 256. So now the investor actually get 2560 out of 5600, which is actually a loss. So this investor sells here. He decided that he want to exit the market and he actually sold. So at this point, his loss was around 3040. Now because the market was actually declining and because the investor knows about reverse trading strategy, so what he does is when this stock again reaches to rupees 56, he decided to invest back and he again bought shares of it. So what actually happened is this total investment now is rupees 560 at this point, and here this guy has actually recovered a loss of rupees 2000 because this guy has actually now the total holding is of rupees 3040 plus rupees 560, which comes to rupees 36. Alright, now what this guy does is he can sell this stock, and if he can sell this stock as rupees 444, then this guy will actually make profit of 15% on his investment. Because the total investment was 5600, he ended up with 3600 as a holding, and he recovered the 2000 he invested before the market crashing, and now he's actually going to sell it when the price reaches to 440. Now, is there any possibility that this price reaches to 440? Remember when he actually bought it, the market was at the peak, so it was at 56. Now he is expecting it to reach 444, which is very much feasible. Alright, so with reverse trading strategy, he actually overcome the problems he had in his strategy when the market crashed. Now before that you jump into this strategy, there is another important thing I need to mention. That is actually about holding the stock. So अगर किसी भी स्टॉक का हाई एंड लो रेशियो विच इज HNL 2 से कम है एंड उसका प्राइस अपने हाई से 50% तक फॉल कर जाता है, तो आपको वो स्टॉक से दूर रहना है, उसको बेच देना है, क्योंकि ये लॉन्ग टर्म में भी फॉल ही करने वाला है. लेकिन ये रेशियो अगर 1.5 या उससे कम है तो आप उस स्टॉक को वापस खरीद सकते. Now there is one more thing which you need to remember before you actually jump into this strategy, that is about high and low ratio. So किसी भी स्टॉक का अगर हाई एंड लो रेशियो 2 से कम है और उसका प्राइस 50% से ज़्यादा गिर जाता है, 50% से ज़्यादा का फॉल आया, तो आपको वो स्टॉक बेच देना है. और इसी स्टॉक का अगर हाई एंड लो रेशियो 1.5 या उससे कम हो जाता है तो आपको वो स्टॉक दोबारा बाय करना है in order to actually recover your losses. और एक और इम्पॉर्टेंट इंडिकेटर होता है इसी टाइम पर, वो होता है 200 डेज मूविंग एवरेज. अगर किसी भी स्टॉक का 200 डे मूविंग एवरेज 5% से नीचे क्लोज करता है तो वो लॉन्ग टर्म में डिक्लाइन करने के ज़्यादा चांसेस देता है, इसलिए आपको वो स्टॉक फटाफट बेच देना है. बट अगर उसी स्टॉक का 200 डे मूविंग एवरेज 5% से ऊपर क्लोज करने लग जाता है तो ये एक पॉजिटिव साइन होता है और आप उस स्टॉक को वापस खरीदने के बारे में सोच सकते हैं. लेकिन वापस खरीदते टाइम आपको ये भी ध्यान रखना है कि हाई एंड लो मूविंग रेशियो क्या है. ऑलराइट, लेट्स मूव टू नेक्स्ट लेसन. The next lesson is about army method in stock market. So this method always works, and even if the market is falling or rising, this method is going to be fruitful. So just assume I have some special interest in some specific stock. I like some stock and I'm pretty sure this is going to rise in the future. So I want to make higher investment in this stock. Now what I'll do is I will never buy whole of the stock amount in one go. So I won't make bulk investment. Rather, what I'll do is I will make systematic investment in this. This is what exactly the army method says. I'll make systematic investment. So suppose in my systematic investment, what I'm doing is I am investing at least for 5 years, every month, rupees 5,000 in this stock. And this is every month. So this is what actually I am doing systematically. The price of the stock will keep on changing, but I am actually going to put money every month only. Okay. Now the thing is, how do you book profit in such situation? Because suppose if I keep on investing like this, then sometimes I can actually buy it at an overvalued price, sometimes at undervalued price. Then how will I book profit? So here comes the army method now. At this point of time, I have around 2,563 shares in my account. Now here take an example of an army. So suppose there are 10,000 soldiers with the army general and there is a fight going on. So what is the best strategy? To send all your 10,000 at one go. Well, if all those 10,000 die, then you will definitely lose the war. So it's better to actually split them into different groups. So if I have 10,000 soldiers, then I'll split them into 10 groups and I have 1,000 soldiers in each group. Similarly with the stock. So I have 263 stocks with me with the systematic investment I have done. So what I'll do is I will split them up into groups. So if I divide this by 10, I get 256 points. So suppose I'll create a group of 256 shares. I have 10 groups now. What I'll do is, if this stock price actually fall with probably, let's say it fall from 30%. So from the existing price. So what I'll do, I'll just sell my stake of 10 shares and I'll book profit. Now suppose this again fall by 30%. At this point, I am again going to sell one of my group and I am going to actually make profit. So the thing is, whenever the price is falling by 30%, I am actually selling just 1/10 of my total investment. And with this method, what I am actually holding is 90%. So here I was holding 90% of my investment. Then again I sold something and I am holding less than 90. Alright? So just to give you more example of it, suppose the price was rupees 100. When this price come to rupees 70, that is it fall by 30%, I am going to sell here. Now when the price reaches to rupees 49, again I am going to sell 1/10. Alright. So this strategy actually helps me in booking profit at the same times. Actually works even if the market is falling. And then it is not going to create panic selling, because I know that I am selling part of my investment and I have different groups to actually rely on rather than selling all my shares at the same time. Alright. So the golden rule is, whenever you have to make investment, don't make a bulk investment. Always go with systematic investment for any specific share you have in. Alright. Let's move to next lesson. So the next lesson is about golden rule of winning in the stock. Now this is quite important because this will actually tell you how you need to bifurcate your investments. So the simple formula is, whenever you have an amount of investment, suppose say you have X amount of investment to make, then your portfolio should consist of rupees 70% of X in equity and rupees 30% of your total investment should go into your mutual fund should go to gain fund, debt funds, ETS, fixed deposit this way. Now the reason is because whenever you have more diversified fund, the risk is less. All right. And this makes your portfolio more stable, even in hard times. And another thing is diversification of is the key. So first golden rule is this, and then it comes to diversification. So you don't have to invest in the same sector, in the same stocks. So suppose I am investing in the IT companies and I bought an Infosys share. Then I won't buy TCS because they are the same sectors. So if one firm in the sector is facing difficulty, it could pass on to the other firm also. So if I'm going for IT stock, I'll go with banking stock against it. Okay. Then the next thing is about actually deciding on the right companies. So how do you decide whether it's a right company to invest in or not? So if the company per share net revenue from the last revenue is higher, then it's a right company. Another thing is if the company pays dividend, it's a positive signal that the company is stable. Then the third thing is promoter holding. It should be always more than 15%. If these three things satisfy, then it's a right. Right? Then another thing is you should actually stay away from future and option. Now future and options are not for beginners, and in the stock market, majorly the long-term strategy prevails. We will actually make a series on future and options also for giving knowledge to all of you guys. And if you want that kind of series, just write down in the comment also. But future and option is not for beginners because they have high amount of risk involved. You can lose lot of money. But of course, at the same time, they have very handsome returns and you can make lot of money also. But then again, it is not for beginner, and staying in the long-term investment is much more beneficial. Alright. Then there is another golden rule which is about averaging stocks. So this is again coming to 200 days moving average. What actually happens is if a stock is above 5% of its 200 days daily moving average, then it's a positive signal and you can actually consider that stock is going to rise in the near future also. However, it is very important to calculate 200 days moving average in the right way. So, in case if the 200-day moving average is falling and at the point where actually the stock is falling, if I calculate at that point of time, then I might get the wrong. So, it's always good to actually calculate 200-day moving average at the point of time when the market is doing it. Alright. And last but not the least, which is very important, is never take loan. So, in order to actually invest in stock market, because stock market is subject to high risk, you should never take loan in order to invest in the stock market, because market might not give you that kind of return which you are expecting. And if you take loan for investment, you might end up into more deep levels. Okay. So yeah, these are the golden rules. Let's move to next lesson then. So the next lesson is about increasing investment. How do you increase your investment in the stock? So let's take an example here. Suppose I have rupees 50,000 and I want to invest this amount. So what I'll do is I will invest this amount in the chunks, and I'll just split this to rupees 5,000, and then I will buy multiple stocks soon. Now, this is the strategy of investment, but what about actually getting to the increasing investment stock? So, my strategy is always that whenever you get 15% increased profit on a stock, we should sell it out in any year. Now let's take an example on. So let's take an example here. suppose we have Mr. X who has rupees 1,02,600, and this guy actually decided to make an investment in the stock. So he bought 30 stocks, and he actually got this for rupees 2,700 at this point of time. So that is his initial investment. Now suppose this guy is actually earning 7.5% annually on the stock he has actually made an investment. So if I consider this after 10 years approximately, then what will happen is investment from 2,700 to 6,400 will increase. So is it a good strategy? No. The thing is, if he was investing every year and he was making return of 15% profit, he has from rupees 2,700 to rupees 3,105 in a year. So this has increased to this amount. So initial and I can say after and when he had made 15%. Now what he can do is he can either invest this rupees 31.05 completely back to the stock market, or what he can do is he can keep up the profit and then he invests back rupees 27. Right? He has these two options. Now the thing is, both of these strategies are actually not good. One, here he is actually taking out the profit which he has earned, that is of rupees 405, while here he was actually putting all the money, so he is not enjoying any profit. The good strategy is to actually increase the amount by 7.5% and keeping the profit. So what he should do is he should have 2,700, and here he should again have 2,700, but he should increase this amount by 7.5% because he has earned 15% in 1 year. So by this, what he can do is he can actually enjoy the amount of rupees 202.50 which he has earned, while he can actually keep on making investments. So in this way, he is actually increasing the amount of investment he had, but he is at the same time also enjoying the returns he is generating. Alright. So the best strategy is this, that you actually increase your investment in a systematic way. You buy a stock, decide your initial investment, then after 1 year when you get 15% return on that stock, just reinvest your amount, but while making a reinvestment, make sure that you are actually increasing your earlier investment, but you are not putting whole of the amount back because it's risky and you won't be able to enjoy the gains you are making on the market. So always increase your reinvestment about by 7.5% after each successful trade. And successful trade is when you actually make 15% on your prior investment in a year. Alright, so yeah, that is the approach which works for the steady growth in the stock market. And this is the approach which is actually going to make you more disciplined when it comes to investment also. Because stock market is all about being disciplined and investing and investing regularly. Okay? So let's move to the next lesson there. Alright, so let's move to next lesson. And next lesson is about stock prices change. So there is a simple rule to this. Whenever demand is high, what actually happens is you have to pay more premium. So the stock prices rise. And when demand is low, what actually happens? Stock prices fall. Because stock prices consist of face value and the premium, which I talked about earlier in the video. So in this case, what actually happen is you always have this always happen because of earning per share. So what actually happens is if a stock has a face value of rupees 1 and that stock has an earning per share of rupees 4.70. So what actually happens is that this stock will actually in 1 year earn around rupees 5. So earning is interest 5. So in this case, buyer has to actually pay the stock price premium in order to actually get the stock. Similar is the case with the PE ratio. So if the stock price to earning ratio is 40, then what actually happen is आप उस स्टॉक की एक साल की अर्निंग्स को 40 टाइम्स मल्टीप्लाई करके उसका प्राइस पे कर रहे हो. ओके, सो if this stock earning is rupees 1, then you are actually multiplying this by 40 and you are paying 40. Okay, now let's take an example here. So the best example is of MMTC. What actually happened is MMTC की जो holding है उनके promoters के पास, that is around 99.33%, which is very high. So what actually happens is अगर मार्केट में सिर्फ 3 लाख के स्टॉक्स ट्रेड कर रहे हैं और डिमांड एकदम से बढ़ती है तो MMTC का मार्केट प्राइस ज़्यादा इंक्रीज हो जाएगा, उसका EPS भी इंक्रीज हो जाएगा और उसका प्राइस टू अर्निंग रेशियो भी इंक्रीज. दैट इज व्हाई आई वाज एक्चुअली टॉकिंग अबाउट द प्रमोटर्स होल्डिंग. And last but not the least, the premium can also go negative. So, because the stock price is based on face value and premium, so in case premium turns out to be negative, then the stock price turns out to be lesser than the face value. And this actually happens already in Pan India Corporation. पैन इंडिया कॉर्पोरेशन का स्टॉक फेस का वैल्यू 10 रुपीज़ है और उसका मार्केट प्राइस 0.70 है, यानी इसका प्रीमियम जो है वो नेगेटिव है. सो द नेक्स्ट लेसन इज अबाउट बिगेस्ट लाई ऑफ स्टॉक मार्केट. सो यू मस्ट हैव हर्ड दैट द स्टॉक मार्केट इज एट ए वेरी हाई लेवल, सो ऑल द इन्वेस्टर मस्ट हैव बीन मेकिंग इट. वेल, दैट इज नॉट ट्रू. Even if the stock market Nifty 50 is doing very well, it is not that every investor is making a huge amount of profit. Why? Because Nifty 50 is actually an index. So I'll just write down here. Nifty 50 is index which changes. That means if I am comparing over the period of time the performance of the stock market, I can't use Nifty 50. बिकॉज निफ्टी 50 में जो स्टॉक्स हैं वो 50 स्टॉक्स से बना हुआ है. बट 1996 से लेकर 2017 तक निफ्टी 50 में 172 से ज़्यादा स्टॉक या तो ऐड किए गए या रिमूव किए गए. निफ्टी 50 में स्टॉक्स को ऐड और रिमूव किया जाता है उनकी परफॉर्मेंस के बेस्ड. अगर हम लोग डायरेक्टली कंपेयर करें निफ्टी 50 2007 को निफ्टी 50 2023 से, तो ये कंपैरिजन गलत होगा क्योंकि कंपोजिशन चेंज हो चुका है स्टॉक्स का और कुछ स्टॉक्स जो गलत परफॉर्म कर रहे हैं उनको निकाला जा चुका है. तो हम ओवरऑल मार्केट का जो परफॉर्मेंस है वो निफ्टी 50 के बेसिस पे नहीं निकाल सकते ओवर ए पीरियड ऑफ टाइम. अब इसका एग्जांपल है जैसे 2010 में सीसा गोवा को ऐड किया गया था और उसने रिप्लेस किया था यूनिटेक को. सिमिलरली बजाज ऑटो ने भी ABB को रिप्लेस किया था. तो जब हम लोग निफ्टी 50 की पोजीशन देखते हैं, इट इज़ इम्पॉर्टेंट टू अंडरस्टैंड कौन से स्टॉक उस टाइम पार्ट थे निफ्टी 50 का. So the crux is you cannot actually compare the performance of Nifty 50 with the performance of the stock market. Because अगर मार्केट ऑल टाइम हाई पे है तो इसका मतलब ये नहीं है कि आपका पोर्टफोलियो के सभी स्टॉक्स को अच्छा परफॉर्म करने का चांस मिल गया है. You need to analyze each stock growth and price movement in order to actually come at the right stock. So the biggest lie of the stock market is if the market is performing well, all stocks are performing. Alright? So let's move to the next lesson. So the next lesson is about option trading. Now option trading is generally more useful for institutional investors. I have not seen many retail investors to make money out of option trading. In short run they might, but in the long run it will always skeptical, and it is always an instrument to actually lose your money. So let's try to understand what exactly it is. So options actually give you a contract to buy certain thing at a specific price before a specific date. Alright, and it does not have any obligations. So let's talk about the options available. We have call option and we have put option. So what exactly happens is, suppose you buy a call option, तो आपको एक प्रीमियम अमाउंट पे करना पड़ेगा जो आपका एक फिक्स प्राइस है. उसके बाद अगर आपको वो एग्जीक्यूट करना है, देन you can actually execute that idea. Otherwise, you will lose your premium. Alright, so let's try to understand this with an example. So suppose Mr. X buys a call option. Now this guy actually is buying a call option. Premium is ₹20 and he is buying 100 shares. So what actually happened is this guy is paying ₹2,000 as premium. Now what happens is, on the date of the expiry of the contract, he has the privilege of executing that contract. So suppose if the stock price rises to ₹2370. Then what actually happens? He is making ₹20 per stock and he has 100 shares. So he can actually execute his option, and then in that case he will earn ₹2,000, which was exactly his premium. So he will not make any loss, neither he will make any gain. However, if the price comes out to be less than this, then he can actually choose not to execute his plan. So suppose if the price come out to be ₹2360, then in that case you will make ₹1,000. So you will still execute and get less losses. But what if the price fell to ₹2,200? In this case he will choose not to execute his contract and he will just make a loss of ₹2,000. So that is why we say option and trading is not for beginners and retail investors should stay away from. Although we will make a series on option and trading in order to give you the complete knowledge of the segment of the market, but that is what exactly it is. Now let's talk about the put option. So put option is actually a little different from call option. It gives you the right to actually sell a stock at a price which is specific on a specific day. So what actually happens here is, suppose now we again have Mr. X, and Mr. X is actually paying again the same premium for 100 shares, and this guy again have the share price as ₹235. Now in this case, what can actually happen is, if the price goes to ₹2,200, then also Mr. X can sell his stocks which he has in 2350. However, if the price rises, suppose the price rises to ₹3,000, then there is no use of selling at this. The next topic is about TV analysis. So if I talk about TV analysis, you must have seen people talking on TV, giving technical analysis and the review about the stock which is going to rise or fall. Well, the thing is, TV analyst is not exactly wrong always. बेसिक फंडामेंटल्स का याद रख के डिसीजन लेना इज मोर better approach as compared to listening to TV advice. So suppose there is a person X and this person is thinking of buying shares of ABC at price of rupees 220. Now this person heard that the TV analyst is talking about the share and he is telling that you can actually buy this stock because this is has the potential to get more growth in the future and this stock is in uptrend. So if this stock actually crosses 200, it can actually rise to 400, 600 or even 1000. Now this TV analyst is talking in a very technical way. So suppose X actually listened to this TV analyst and decided to buy 1000 shares here at this price for ABC stock. Now what could actually happen in this case is the price of the stock might rise to rupees 250 in the coming year. But because this person is a long-term investor and he has listened to TV analysts, what could go wrong here is this person does not book profit at rupees 250. So if he stays invested for a longer duration of time, this stock might comes down also. So suppose after a year, the price comes around rupees 100 or 150. Now this person actually does not know what to do because his money has been blocked for an year and has been making losses. Now suppose this guy calls the TV analyst for the advice and asks that 1 year back you talked about the share of ABC, however that share has not actually increased. It moved beyond 200 but does not rise to the level which you were talking about in the video. So what should I do? So this TV analyst says that why didn't you use stop loss at 200? Because I said that it might cost 200 but you are buying it at rupees 220. So you should put a stop loss at 200. Now this person is more confused because he is a long-term investor. He does not know about stop loss also because it's a technical advice. So what could happen is this TV analyst again recommended to this guy that you should buy XYZ company share because that is in uptrend right now and it might rise to a higher value in the future. Now suppose this person actually executed this advice and buy the share at rupees 300. So what can happen is this share might not rise or might rise in the future, or probably let's say this person share rise to rupees 350, but this share which it was holding earlier, it rise to 310. This is more confusing now because the share which Mr. X had earlier has risen while the share TV analyst said that would rise has risen but has not risen to a very great level that Mr. X could have actually get the investment he has done in the market. So that is where Mr. X would like to quit stock market and go back to the same business he was doing earlier. But this is what the impact of TV analysis. So short-term technical tips does not hold for a long-term investor. For a long-term investor, you should believe in the fundamental investing. And you need to understand the technical language with the short-term analyst is using. Those TV analysts which are actually giving you the advices, they are giving it more for the trader's point of view rather than for the long-term investment. For long-term investment, you need to use the fundamental analysis technique, which we are talking about in this video and have talked earlier also. Alright? So, you should not waste your time on the TV analyst and their guidance. Rather, follow the approach of fundamental analysis if you are looking for a long-term investment rather than making money in the short term. Okay? So, let's move to the next lesson then. Let's talk about spirituality in trading. So, what actually happens in Gujarat is many traders actually believe in astrology. And before getting into trade, they actually consult the astrologers. Astrology believes that the movement of the market depends on Surya, Rahu and Shani. कभी कभी ऐसा भी होता है कि हैवी लॉसेस हो रहे होते हैं and someone really experienced good results. So at that time, people actually went to astrologers and start identifying what is actually happening with them. And this is what exactly a practice in Gujarat. Mostly people consult astrologers. But always remember, astrology and spirituality can give you peace of mind, but market analysis is very important. Now, to give you one advice for the perspective of astrology, let's talk about this also. So, what most people suggest is that every Tuesday you need to get a bark of shisham. Shisham is a tree, and if you get a bark of shisham, which is around 3 to 7 inches long, then you need to actually wash it up and keep it in your pocket while you are making trading. What it does is it keeps your mind calm while making decisions. So this is not actually a strategy which I would say will always work or help you in your trade, but this is just from the perspective of the astrology that you can make good decisions if you have a bark in your pocket of shisham. It is believed that this will bring good luck. So for that reason it is used. However, there is no scientific proof that this will work, and trying this won't hurt, but you need to get the basic clear and you need to work on the market strategies rather than finding this strategy. However, you can still try this. Alright? So that was about the role of spirituality in trading. Let's move to the next topic. Alright, so the next topic is about technical analysis. Now in technical analysis, what we do, we measure the stock prices, volume and market activity. And we use all these via chart. We analyze what is going to happen in the market. Now this is used more by traders, and with fundamental analysis, you can use this method also if you are a long-term investor. Now there are many complex calculations also involved in this. There is relative strength index, which we call RSI, and there is moving average, जिसके बारे में हम लोग बात करेंगे. So let's talk about this. First of all is there is bullish pattern and there is bearish pattern in the market. अगर एक स्टॉक अपने लोएस्ट पॉइंट के आसपास ओपन होता है, जस्ट लेट मी राइट दैट डाउन, लोएस्ट काउंट पे ओपन होता है और उसके बाद डे एंड आने तक वो क्लोज करता है नियर टू इस हाईएस्ट पॉइंट, तो वो एक बुलिश पैटर्न होता है. सो हाईएस्ट पॉइंट, close. Now for the example, you can say Mr. X actually buys share of ABC company at rupees 1190. On the same day, the lowest of this was rupees 1105 and the highest was around rupees 1210. So what happened next day is, if the stock opens at rupees 1230 and it goes till 1217 while closing, then we can call this is a bullish pattern, और ये इंडिकेट करता है कि आप स्टॉक को होल्ड कर सकते. ऑन द अदर हैंड, अगर कोई भी स्टॉक अपने हाई पॉइंट के आसपास ओपन होता है और क्लोज करता है नियर टू इट्स लो, इट्स अ बियरिश पैटर्न. फॉर एग्जांपल, इफ द सेम स्टॉक opens at rupees 1212 and it closes at rupees 1197, then this signals a bearish pattern. In that case, you should actually sell the stock and book your profit. Alright? I just mentioned here over airport school. So after this, there are more ways of actually doing technical analysis. One is moving average. So अगर किसी भी स्टॉक का 50 डेज का एवरेज या फिर 100 डेज का मूविंग एवरेज के ऊपर वो ट्रेड कर रहा है, then it's a bullish signal. You can hold the stock. But अगर 50 डेज और 100 days मूविंग एवरेज के नीचे कोई भी स्टॉक है, then it's a bearish pattern and you cannot actually go ahead and keep that stock for a longer duration. It's better to sell it off and then book your profit on loss. Alright. Another indicator is RSI, relative strength index. Now what does RSI tells you is that whether the stock is overbought or oversold. अगर RSI किसी भी स्टॉक का 70 से ऊपर चले जाता है, इसका मतलब ये होता है कि वो स्टॉक ओवरबॉट हो चुका है एंड इट इज वेरी रिस्की टू होल्ड इट, सो इट्स बेटर टू बुक प्रॉफिट. सिमिलर इज द केस विथ RSI व्हेन is less than 30. In that case, it is a good time of investing in that stock. So, it's better to invest. Alright. So, these are 3 criteria for identifying whether you should hold a stock, whether you should sell it out, and this is used by technical traders. However, when you are a long-term investor, it is better to use this technique with the fundamental analysis in order to make profit in the longer time. Alright, so let's talk about the support and resistance level. Resistance एक ऐसा लेवल होता है जो करंट मार्केट प्राइस के ऊपर होता है. So suppose the current market price for a stock is around 1000, then I can say the resistance level would be rupees 1200. This could be the resistance price. This is above the market price. यहाँ पे सेलिंग का प्रेशर इतना स्ट्रांग होता है कि प्राइसेस और ऊपर नहीं जा सकते. सो जब भी कोई स्टॉक रेजिस्टेंस के पास पहुंचता है, इट इज अ गुड टाइम टू बुक योर प्रॉफिट. ऑन द अदर एंड देयर इज अ सपोर्ट लेवल आल्सो. सो सपोज द सपोर्ट लेवल इज अराउंड रुपीज 800. सो व्हाट एक्चुअली हैपेंस इज हियर वी हैव अ बाइंग प्रेशर एंड विच इज वेरी स्ट्रांग. सो जब भी किसी स्टॉक का प्राइस सपोर्ट के करीब आता है, इट इज बेटर टू बाय दैट स्टॉक. ऑलराइट, सो यू बाय एट सपोर्ट. Alright, so these are the 4 methods you can use in order to understand technical analysis and to make actually the decision of whether you should buy a stock or you should hold for some time. And always use these methods for technical analysis along with the fundamental analysis for your better long-term investment. Alright, so let's move to next lesson then. So the next lesson is about penny stocks. How do you identify penny stocks? Now penny stocks are those stocks which are very cheap, but these stocks can actually give you good returns if they are handpicked with the method I am going to tell you here. So these stocks are just, you can consider as scrap. Okay, let me change the color. So you can consider them as scrap business. So what you have to do is you have to pick up the penny stock and then you have to make investment in those stocks. Now think of them as scrap which can actually sell at a very higher price and give you higher returns. So there are some methods of selecting a penny stock. Number 1 is year high and low ratio. Stock का year high or year low ratio, it should never be greater than 2. For example, अगर stock का year low ratio ₹10 है और year high ratio ₹22 है, so then in that case we can say it is a red flag and you should not go for it. Okay, so that is rule number 1. Then there is rule number 2, which is about promoter holding. So the promoter holding should be at least greater than 20%. Promoter should not be actually diluting his stake in the firm. Alright, then there is third, which is about market price and revenue. सो स्टॉक का जो मार्केट प्राइस पर शेयर है, 1 साल के नेट रिवेन्यू से कम होना चाहिए. रिवेन्यू 0 नहीं होना चाहिए. ओके, सो आई कैन से मार्केट प्राइस एंड रिवेन्यू. देन द नेक्स्ट इज अबाउट स्टॉक का स्प्लिट और बोनस नहीं होना चाहिए. सो नो स्प्लिट और बोनस in the last 2 to 3 years. Okay. The 5th one is about bulk deals. So there should not be any bulk deals. So, if there are no bulk deals in the last 2 to 3 years, if there is no split and bonus, if the market price is greater than the net revenue for a year, and revenue is not zero. And also the promoter share holding, so promoter holding is greater than 20%, and year high and low ratio is less than 2, then you can actually go for that penny stock. It's a good deal, and with this method you can actually get to good penny stocks which might give you better returns. However, very important point here is that these penny stocks should not be more than 10% of your total investment, because it's a scrap business, and in the scrap business you don't put all of your money, so it should not hold more than 10% of your total investment of the portfolio. Alright, so let's move to the next lesson then. So the next lesson is about short-term trading formula. Now this is not about trading but about long-term investment, and this video mainly focus or centered around long-term investment. But let's discuss what exactly short-term trading formula is also, which can work for traders. Just introducing this topic in order to give you substantial knowledge how exactly things work. So सबसे पहले पिछले दिन के स्टॉक प्राइसेस को निकालना पड़ेगा और ओपन एंड क्लोजिंग प्राइसेस के बारे में पता होना चाहिए. फिर उसके बाद ओपन एंड क्लोजिंग प्राइस का डिफरेंस निकालना पड़ेगा, जो कि देखना पड़ेगा whether this difference is actually positive or negative. So I'll just write opening price and closing price, and then you have to see whether this difference is actually positive or negative. Now based on this you can actually make trading decisions. अगर पिछले दिन का क्लोजिंग प्राइस और ओपनिंग प्राइस का डिफरेंस नेगेटिव है और आज का ओपनिंग एंड प्रीवियस क्लोजिंग प्राइस का डिफरेंस भी नेगेटिव है, तो आप शॉर्ट पोजीशन ले सकते हो. सो प्रीवियस डे I can say previous day and today opening price, closing price negative and negative, then a trader can take short term position on this. And अगर पिछले दिन का क्लोजिंग प्राइस और ओपनिंग प्राइस पॉजिटिव है और आज का ओपनिंग एंड क्लोजिंग प्राइस भी पॉजिटिव है, तो यू कैन टेक लॉन्ग टर्म पोजीशन. And most of the traders actually follow this approach. Now there is one more concept, that is about intraday trading. For intraday trading you have to select only those stocks which are actually trading above or below their 200-day moving average. So suppose this stock is trading above his 200-day moving average, then you can actually take position on this. However, the thing is you should always use 30-day moving average as a stop loss in this condition in order to actually save the losses you might get when you take a trade like this way. Okay. However, selecting the stock is should be always based on your 200 days moving average for intraday trading. Okay. So that is about all trading, and because this video is not exclusively focused on that, if required we can make video on that also. Just give us in the comment that you want a knowledge on the trading part. We will definitely make a video on that also. But that is what exactly the way usually decisions for the day were taken by traders who actually trade every day. Alright, so let's move to next lesson then. Next lesson is about mutual fund investment. To be honest, mutual funds are not that interesting as their advertisements are. Usually what actually happens is those who invest in stock market, whenever their stock rises, they feel overexcited and they feel overwhelmed because they have researched a lot about that stock, and then if the stock price has increased to 30% or more, they get super excitement when it comes to getting returns. However, mutual funds is actually something which is behaving with the flow of the market. So if the market rises to 20 to 25%, then mutual funds also give you 15% of returns. However, if the market falls, then mutual fund will also fall. And mutual fund also does not have a stop loss. While the TV expert and all other investment advisors give you the idea that there should be a stop loss, in the mutual fund there is no stop loss. In 2007, when the market crashed down by 60%, mutual fund actually lost their net asset value by 50 to 70%. This is because there is no stop loss in mutual fund. So that is also something which is confusing about mutual funds. But let's discuss how exactly you can select for yourself the best mutual funds in order to get better returns on your investment. So the first thing is about fund size. So whatever the mutual fund you are investing in, make sure that it has a high fund size, because higher fund size mutual fund will always have more money, and there would be more investors in that mutual fund, which can actually help it to lead the market. Fund manager has more option to actually diversify the investment, and in that case you can get better return. Another way you can view mutual fund is by investing in it via SIP. So SIP refers to systematic investment plan, where you keep on investing in mutual fund over a long term in order to get long term gains. So it could be like I am actually investing rupees 2000 every month into mutual fund. Now the thing is, I don't have the burden of investing very often or buying mutual funds at the same time with the huge amount of bulk of money. Rather, I am investing every month, so I am going to get better returns, and then I am more stable also in case I use SIP. We talk about SIP in this video only when we were talking about the specific stock you want to invest. So that's the same strategy which actually work here. Now the another thing is, whenever you look at the mutual funds, don't believe their past performance. The thing is, there is rebalancing always. So some of the stocks will go, some of the new stocks will come up. The fund manager will decide whether they want to put money in the banking industry more or in the real estate more. So that's why the past performance does not reflect what is going to happen in the future for mutual fund. It can give you a signal, but it is not actually something which might help you in deciding whether you should invest in the mutual fund. So long term में biggest fund size वाला mutual fund ही जीतता है. So always consider the fund which has larger amount of size and more diversity. Okay. Another interesting thing about mutual fund is a very long term game. So what you have to do is you have to book your profit when the opportunity comes in. We will talk about this in the upcoming lesson in this video only, when you should actually book your profit for the mutual fund. But the important part is mutual fund is a passive form of investment, and if you deal with stock and do research, do fundamental analysis and combine it with technical analysis and pick the right stock, you will feel more thrilled as compared to investing in mutual fund. Alright, so let's move to next lesson. Next lesson is about ELSs. So ELSs are basically your tax saving mutual funds. So whenever you have to invest in mutual fund, make sure that you invest in ELSs also in order to save your taxes. What actually happens is, when you invest in ELSs, your amount get locked in for 3 years, and whatever returns you are going to generate, they would be tax free. So in order to decide which ELSs option you should go, there are two criteria. One, there should be a dividend option. So always choose the one which is offering dividend. The reason is because your money is going to stuck for automatically for 3 years. So whichever mutual fund is actually providing you ELSs, that fund will actually give you better or more returns as compared to what the other mutual fund is going to do. So always choose the option with dividend. Okay. Then next is about choosing through SIP. That is systematic investment. So what actually happens is, when you invest through SIP, then it's a very smart move on your part, क्योंकि ये market के fluctuations को smooth out कर देता है. और more interesting part is, you are actually investing in a very systematic way, which is going to bring more discipline into your investment strategy. So whenever you have to choose an tax saving mutual fund, always go with the one which has an option of dividend and where you can actually invest with SIP, so that you don't have to put all of your money freeze at one go, and in addition to it you can actually bypass the market fluctuations. Alright, so let's move to the next lesson then. So the next topic is about booking profit in mutual fund. What actually happens is when there is a bullish market, बहुत सारे इन्वेस्टर अपने म्यूचुअल फंड में प्रॉफिट बुक करते ही नहीं. टीवी पर एक्सपर्ट्स बोलते रहते हैं कि इंडिया की ग्रोथ स्टोरी 20 से 30 साल तक चलने वाली है, लॉन्ग टर्म स्टोरी है, सो यू शुड स्टार्ट इन्वेस्टिंग फॉर ए लॉन्ग टर्म ड्यूरेशन. लेकिन फिर मार्केट क्रैश हो जाता है जैसे कि 2008 में हुआ, और इन्वेस्टर्स ने जो भी म्यूचुअल फंड में कमाया होता है वो सब कुछ वापस चला जाता है. तो इसके लिए देयर इज ए मेथड विच आई एम गोइंग टू टेल यू विच कैन एक्चुअली हेल्प यू इन गेटिंग योर बेनिफिट्स फिक्स. तो सपोज जब आपने इन्वेस्टमेंट किया, वो नेट एसेट वैल्यू 10 के आसपास था और अब वो ग्रो करके आपके 11% के आसपास आ गया. एट दैट पॉइंट ऑफ टाइम यू हैव टू सेल 1/3 ऑफ योर इन्वेस्टमेंट इन ऑर्डर टू बुक प्रॉफिट, और उसके बाद SIP को कंटिन्यू रखना है. सो लेट मी गिव यू एन एग्जांपल एंड एक्सप्लेन टू यू. So suppose Mr. X is here and he has invested at rupees 10 net asset value of rupees 500 SIP. Okay. Now after 15 months what happened is his net asset value has increased. At this point of time he has around 733 total units, and his total investment is 15 into 500, that is 7,500. This is what exactly his total investment is. Now if the net asset value has increased and at this point of time it is 11.36, then what actually happened is he has 733 into 11.36, so rupees 8326. Okay, now in this he has actually made a profit of 826 rupees. Okay, so what he has to do is now he has to actually divide this 826 by 3 and has to book profit. So this will come out to be 244 approximately. That means he can actually sell 244 units as of now in order to book his profit. Now if he sells 244, then what will happen is 244 into 11.36, he will get rupees 2775 approximately. Okay. At this point of time, if he just subtract the profit he has earned, which is 826, then this will come out to be rupees 1949. So this amount he can actually put in his savings account and use the 826 which he has gained, or instead of putting this into saving account, he can actually put it back to the mutual fund. But I'll suggest a saving account so that you get a return on that also. And mutual fund, again, you have to continue with your systematic investment. So it's not a good idea to actually put the bulk amount also back. Okay. But this rupees 826, this can be enjoyed as a profit. Alright. And next time, whenever the net asset value again grows by 11%, the person can actually choose to do this exercise one more time and can book the profit. So the idea is profit निकालने के बाद अपना SIP कंटिन्यू रखना है और नेक्स्ट 11% की ग्रोथ का वेट करना है. अपने बुक प्रॉफिट को सेविंग या डेप्ट अकाउंट में रखना है ताकि उस पर एनुअल इंटरेस्ट भी मिलता रहे. और ऐसी स्ट्रेटेजी यूज करके आप मार्केट की जो क्रैश है उससे भी बच सकते हैं, so that you don't lose the amount of money you have invested over the period of time. Okay, so yeah, that was about booking profit in mutual fund. Let's move to next lesson. So the next topic is about stock holding criteria. Now here what actually happens is the greed takes place. everyone has a different criteria and different opinion about this, whether they want to hold the stock or not. That purely depends on the grade. However, I'm going to give you some simple rules which you must exercise when it comes to actually deciding whether you should hold that stock or not. So the first one is 15% profit. If your stock is actually giving you returns of 15% in an year or so, if it has rises by 15% of the entry price at which you have actually bought that stock, then book profit. Because it is better to execute a trade at that part of point where you are actually making good returns rather than being greedy. Another important aspect is about the base price. So we have already discussed about the base price in this video many times. The stock is trading above its base price from the last 3 years. You should stay away from it and you should actually take an exit at that point of time, because there is a high volatility in that part and you might end up making a loss if you don't book your profit at that point of time. Alright. Then there is one more method which is, we can say, a targeted price formula. So I can write that down for you. It is basically the formula which works based on different analytics available. So the first thing you put here is basically net sales per year. So I can write net sales per year here. Then another thing you put is the book value of the stock. So you can add book value here. And then another thing is about the base price. We add base price. Once you sum these all and divide it by 3, you will arrive at the targeted price. And based on that price, you can decide whether you want to hold that stock or you want to sell it out. However, the best strategy is always the first one. So whenever you are making good returns on a stock with more than 15%, it is better to look for other opportunity and take an exit from there. Alright, so let's move to the last lesson for the week. So the next lesson is about recovering losses. So whenever you trade in the stock market, it might happen that you will enter into losses, you will gain in your trades and you will make money and you will lose money. This is the part of the cycle. However, there is an important part which you need to take care of. So whenever you invest in a stock, always keep checking the 200-day moving average. So 200-day moving average, you need to keep an eye on it. और किसी भी स्टॉक का अगर 200-day मूविंग एवरेज नीचे ट्रेड करता है तो उसे बेच देना. लेस देन 5% पे आते ही 100% उसे बेच देना, बिकॉज देयर इज ए स्ट्रॉन्ग सिग्नल दैट दिस माइट गिव यू लॉस इन द नियर फ्यूचर. लेस देन 5%. So, किसी भी स्टॉक का अगर 200-day मूविंग एवरेज लेस देन 5% पे आ जाता है और उस स्टॉक को आपने खरीद रखा है, सेल इट आउट. देन नेक्स्ट थिंग इज यू कैन एक्चुअली री एंटर इनटू मार्केट इफ दिस स्टॉक actually crosses this GMA again. At this point, you can re-enter into this market and can actually buy that stock. And when the market is stable, you can actually book more profit. So the idea is, its DMA was actually going low from the 200-day moving average, less than 5% it removed. So you actually send it off, and when it actually crosses back the 200-day moving average again, it means it is rising now. You can actually buy it back. And for this, the thing is, you have to keep checking of the movements and regularly track what actually is happening. Only then you can take decision like this. And this strategy can actually help you in actually reducing your losses and getting back whatever the losses you have made ahead of time in the market. Okay, let's understand this again back with the help of an example. So suppose there is some stock X which you bought at rupees 105. Now, what actually happens, this stock starts at rupees 92. Its price has fallen down, and this price is less than its 200-day moving average. So at this point, what I'll do is I will actually sell this stock. Now suppose this stock further fall down and it comes to rupees 50. I have, because sold this stock, I have stopped my losses. Now at 50 I will keep monitoring it, and if this stock actually crosses this GMA back, I will again buy it. Why? Because I have selected that stock based on my fundamental analysis and I was sure that this will rise. However, it falls below its 200-day moving average. So I sell it off in order to not to make further losses. But because it is crossing its GMA back, and I am sure with the fundamental analysis part that this was actually a good stock, I will reinvest and then I will recover the losses which I have made. Alright? So that is how you recover the losses whichever you make in the stock market, and that is how you do the trades, pass and make decisions. Okay? So yeah, I think that is all for this video. We have covered almost all the basics of the stock market and the smart investing techniques which you need in order to work with the stock market. And we have not covered about the option trading much and then the trading strategies. But if you need a video on those parts, just mention in the comment section that you need a video on that part, and we will try to make a video soon on that and try to explain you what exactly happened in those segments. Alright? So yeah, I think that is all. I'll see you in the next video, and please don't forget to like, subscribe and share it with your friends. Thank you.